Welcome back everybody. So this is gonna be a quick update video for you guys on stock market, and before we get started, please smash that like button, and 100 plus likes on this video would be greatly appreciated guys. And if you're new here, consider subscribing. Now if you want to get my daily trade ideas, swing trade ideas, live trading, and you want to support the channel, definitely check out their link down below in the description for Patreon. So before we get started, let's show you guys what's coming this week. We do have CPI coming out 8:30 a.m. on Wednesday, and that's going to be a big market moving event. We're already seeing a lot of volatility here in this market, and I think it's here to stay. Now, with that being said, let me show you guys another thing. Yield curve. You can see right here, crossing the zero line right here, guys. And you can see right here, back in 2008 to 2009, what happened? It actually uninverted, and then we saw the big sell-off again here back in 2002, and you can see time and time it actually signaling a recession, or at least we're going to see some sort of a mild recession. Something is broken inside, we don't know. So I just wanted to show you guys quickly that this thing is crossing zero line for the first time in a long time. For last 2 years, you can see this thing was below zero line, and now it's crossing. So you got to be really careful in this market, and I don't think this is actually a fluke. This thing just gonna cross and then come back. Finally it's crossing zero line, and whenever that happens, it's actually not good news for the market. So I just wanted to show you guys before we get started that a lot of things are happening, and there are a lot of bulls out there becoming a big bull at all-time highs. And I've been talking about it that yes, you can become a bull, but not at an all-time high. Now, last week on Friday, while Dow Jones was down 1%, Nasdaq was down 2.5%. Over that, S&P was down 1.73%, Russell down almost 2%. And if you look at my screen, here's 11 sectors that makes up S&P 500, and pretty much everything in deep red. Communication services down, consumer cyclical down, technology down, financial down, basic materials down. Look at right here. Defensive names, real estate, consumer defensive, healthcare, utilities, those are on top. Stock market map, what we got? Well, Nvidia took a big hit on Friday, down 4%. AMD almost the same. Microsoft down 1.64%. Apple down 0.70%. Google down whopping 4%. Meta down 3.21%. Tesla down almost 8.5%. And then we got Amazon down 3.65%. And here's my X account. And if you guys are on there, definitely give me a follow. And you can see, I just turned it on, and you can see recession is actually trending right now. So that is something big. A lot of people are talking about it. And we're not going to know until we're actually in a recession. So that's what's probably happening right now. We don't even know that we're in a recession, or at least the recession is getting started, guys. Now, with that being said, especially if you're serious about trading and you want to get trade ideas like this one that I actually shared on Friday, you can see right here, DIA pretty much showed it at the top. 411 got 410 puts, and this one went through the roof within just maybe about an hour or so. You can see not even an hour, and it was down to like 407. So this was a fantastic opportunity. We short it, we made money, and then there was more money because we closed at like 404 on Dow Jones. Now also this play right here on PayPal, that is a swing trade. You can see that I got in at 820 2024, $70 puts, and this thing also went through the roof. It was trading at 68, took some profit, still holding a lot of puts on PayPal, and I'm expecting a move down to 66 to 65 bucks. And I'm only sharing a few trade ideas here. Here's another one, Tesla, guys. We talked about it that it was looking bullish, bull flag breakout. Well, we played the breakout to the upside and then shorted. Not here. This was at 234. I got in here on Tesla, 220 puts, and I took some profit same day at 225. And what happened on Friday, guys? Massive, massive dump off Tesla puts went through the roof. So all these trade ideas, and especially if you guys are serious about trading, I'm talking about serious people that are actually looking to trade and make money in this market, want to learn, and they want to stay in here with trading for a long time, then definitely check out their link down below in the description for Patreon, guys. And I'm telling you, you're not gonna be disappointed joining my Patreon. On SPY ETF, it's down 1.68%, so massive dump off. And even though we're coming down here on SPY ETF, technically it's still bullish. And why? This is the weekly time frame. And what do we got here, guys? Previous all-time highs right here, right? 480, 482. We actually never came back to retest previous all-time highs. This was the recent pullback, and look at what happened after that pullback. Massive rally back up to the upside, and now immediately turning back, and you can see this. You cannot ignore this massive bearish engulfing candle. That is never a bullish thing for the market. Now, on this daily time frame, yes, we can come down even more. We have this gap down here. So that's going to be the next target, 535 right here on SPY ETF. And then we have lower Bollinger Band down here at 533. So that should act as a support right here going into next week on Monday. And looks like we're almost there, 538.77, right? It was selling up even after closing on Friday. Now, to the upside, we get some sort of a counter trend rally. Watch out for the resistance at 543. Only if that breaks, you're going to see a move up to, I would say, 549 to this red line, 50-day moving average, and over that, maybe even 552 for next week. Now, if this downtrend continues next week and SPY ETF takes out this gap fill reversal support right here 535, there is going to be more dump off, and at some point we might be even retesting 510 here on SPY ETF, guys. You guys saw that yield curve on inverting, and that is not a bullish thing for the market, and that is a huge deal for the market, especially when that thing is crossing the zero line. On IWM, it's down 1.90%, and IWM also breaking down. Now, a lot of people seems to like think that rate cuts are happening, and there you go, IWM breaking out, and we're just gonna buy 300 calls, and it's gonna be near the money by next year. Well, that's not the case, because if you think about it, on a recession, who will survive? You will see surviving big companies like Apple, Microsoft, Google, big companies like Facebook, people that actually have cash on hand. You're not gonna see, something like Upstart surviving. You're not gonna see something like AMC surviving, smaller companies. And look at what's happening with SMCI. Couple months ago, I was making videos on SMCI. We had that massive squeeze, big run to the upside, and I also said that in my video that the stock, I think in my view, worth maybe like 20, 30 bucks, and it's trading at 1,000. At one point, it's gonna go down, and you can see what happened. Well, it was well over what 1,000 bucks, and now trading at what under 400, guys. So that is why, yes, you can become a bull, you can trade the trend, but when you know that it's not worth $1,000, don't go and buy it. Same thing for IWM. It's gonna look more bullish, and it's gonna run. And I'm gonna tell you guys when. When they stop cutting rates and it's near like 2%, 3%. If it's zero, it's even better. That is when easy money is there, and these smaller companies can survive. Right now, if they're cutting rates and there is a recession, usually on a recession, small companies they don't survive. Go and look at it, over and over. Every recession, what happens? This small business, this small company, are running out of business. They cannot pay people. They don't have the money. They don't have cash on hand. The main thing is cash on hand. If you look at something like Apple, how much money they have cash on hand, you know, Microsoft, how much they have. So these companies, if there is a dip, definitely. These ones, when rates are down, and we're pretty much going through a recession, and it's actually like end of the recession, that is when you buy IWM, at least in my view. If you have some different views, let me know in the comment section. Now, IWM under that breakout zone, so this was definitely a fake a double fake out to the upside. It's not holding 210, 211, and now we might be pulling back down to even 200. And then if you look at my screen, 203.63 lower Bollinger Band. So yes, this thing can dump even more. And someone actually texted a few days ago. It was actually in my Discord that I think IWM going up to 300. It's gonna be near the money by next year. That's not how it works. It's not going to be 300 by next year unless something really good happens where this thing pumps and pumps like Q's was doing from that 2022 bear market. But IWM does not have Apple, does not have Microsoft, does not have Nvidia. IWM has like what, SMCI? That's not going to help, right? All these smaller regional banks, smaller companies. So, you buy IWM when the time is right. Like last year in October, I actually bought right here, and this was a massive trade. I wish I was holding up until 200. We actually bought, maybe I think it was at 168, and it was dumping even more. It was underwater, and then gap up and go, right? Because it was really low, so, upside potential was huge. Now, people that are calling this a breakout, even though they saw that it was a fake breakout to the upside and came back and again becoming a bull here. And you can see this is a lower high on a weekly time frame. And now we might be taking out this low down here, which is at 196. So IWM, you got to be really careful. Unless this thing breaks and holds over 216, it's not bullish. And that would be going over these moving averages under 216. This thing, in my view, is a shorting haven. If this thing cannot break over 216, it'll come back again, possibly down to 203, 200, 198, maybe even 193. So watch out for that on IWM. And this selling was on high volume, so keep that in mind. On triple Q, it's down 2.68%. It was down big on Friday. I mean, you can see $12.35, and we actually went through that expected move. It was like $6 and some change, like 650, let's say $7, but we exceeded that amount in a big way, guys. It was a two sigma move definitely on Friday, and then this was actually a four sigma move to the downside. So you can see how market is moving right now. So if you're actually getting caught on a wrong side of the trade, you can lose a lot of money becoming a big bull. Trend is down, and you can clearly see high, lower high, and now we might be making a new low here, taking out this low. Now, it's not going to be so easy. And why? Because we have this lower Bollinger Band sitting at 447, and you can see we came down. It's kind of just sitting here and not going down until this Bollinger Band comes down a bit more, and then we might see more selling, possibly down to this support 424. So now, going into next week, this is going to be a line in the sand, and pretty much it's, I would not say this is not holding. You can see previous high right here, 449, pretty much holding right there. And then underneath that, we have a lower Bollinger Band, which is sitting at 447. So this is going to be a strong level. But if that gives up, the next one, 440, and then 432, and then 424. To the upside, any counter trend rally, watch out for a move, possibly back up to 455, and over that 460 to 462 negative sloping 5-day moving average, and over that we can talk about possibly going back up to the upside. Until then, guys, it's not looking good, and especially with that CPI, it can actually dump even more. And look at the volume here on Friday, high volume selling again here on Qs. On Dow Jones, it's down 1%. So Friday, you guys saw that trade. It was fantastic idea to get some puts right here near 411. And I think I got in at 410.87. So it was pretty much at 411. And why? Well, I'm going to give you guys some levels. What do you see right here? 411. And then this candle was almost near 411, 411. And then not only these rejections, 411, these two moving averages, negative sloping 5-day moving average and 13-day was sitting at 411 also. So this was a fantastic opportunity to go and short. And the stop loss was at 412.50. So it was like just a dollar 50. And then what happened? We actually never crossed. After I actually got in, we actually never crossed 411. So forget about your stop loss. it was never gonna get hit, and it was only coming down, and money was going into our pockets right here. So this was a fantastic setup. And also, not only that day trade that I'm actually sharing with you guys, we did actually short Dow Jones with some longer expiration puts, and those are 396. So those are also up by 50-60% at this moment, and I'm still holding entire position. I'm not selling any. And why? Because we saw SPY ETF filling the gap, we saw Qs filling the gap, we saw Russell 2000 IWM filling the gap, and that is why I'm holding, because I know by maybe Monday I might be making big money here at 400. So this was a fantastic opportunity to get puts on Friday, and especially keeping those longer term swing puts on DIA. And these are going to pay even more. So these setups are really good when you can get in at the right time, because not always you're getting in at the right time at the perfect place. And that is why you got to have patience. When you're trading in this market, you got to wait. You cannot pull the trigger all the time. You don't trade all day. And if that's what you're doing, you're going to lose money. Now, here on Dow Jones, you can see we definitely cracked under rising 20-day moving average 407.30 right here. So that's going to be a resistance to watch if we make some sort of a move back up to the upside. Over that 411, that's going to be another spot to watch if that thing actually goes up to 411. And I don't think it's going to happen next week. But to the downside, I think we might see a gap down to this gap 400 early as Monday morning. And if that happens, this is going to be a critical support to watch right here at 400. But by then, Dow Jones will be trading under all these moving averages. Yes, we do have support near 402, but I think if it's coming down, it's going to fill this gap. So this support don't really matter that much. This 50-day moving average, I think this is going to be the main support around 400 to close the gap and possibly hold this, and then maybe even hold because this 50-day moving average will be here near 400 as well. So this is going to be a strong level to watch. To the upside, big resistance to watch 407.30, and over that 411, and then we can talk about maybe even another brand new all-time high, which is unlikely. On VIX is up 12.46%, so massive pump right here on VIX. And I think at some point, I don't know when, we might see VIX. We saw that pre-market on August 5th, it was going up to 65.73, and then massive dump up. So I think at some point we might see that move up to this 65 level, but I don't know when that is going to happen. But also keep that in mind. I did show you guys yield curve crossing zero line, and that is never a bullish thing for the market, but it's definitely bullish for this thing right here, volatility VIX. So now going into Monday session, critical level to watch, $20 right here. And you can see last whole week we came under, went back up, we came under, went back up. So 20 is the line in the sand right here on VIX. Over that, we might see a move up to 26, maybe even 30, and that can happen definitely in a quick time next week with that CPI. Under 20, it will be going under this 5-day moving average. The next support will be down here at $18.